Bloomberg Audio Studios. Podcasts, radio, news.
Good morning, I'm Nathan Hager.
And I'm Karen Moscow. Here are the stories we're following today.
Karen, we are hours away now from the most anticipated Fed decision in years. After holding borrowing costs at a two-decade high for more than a year, the Fed is widely expected to cut rates at least a quarter point today. We get a preview from Bloomberg's Michael McKee.
A Fed rate cut would be the first since 2020 when the central bank took rates to zero during COVID. The pandemic snarled supply lines and the government provided extra cash to consumers. The combination touched off the highest inflation since the 1980s. And the Fed took rates back up again to their current range of 5.25% to 5.5%. Analysts are divided over whether we'll see a half point or a quarter point cut today. That will depend on whether policymakers see the risks tilted more towards an economic slowdown or to reaccelerating inflation. One thing that is certain, more rate cuts are to come. The Fed will suggest how many with a new dot plot today as well. Michael McKee, Bloomberg Radio.
All right, Mike, thank you. So will it be 25 or 50? We asked Laura Rame, chief U.S. economist at FS Investments, Robert Teeter, chief investment strategist at Silvercrest Asset Management, and Michael Darda, chief economist at Roth Capital Partners.
I am in the 25 basis point camp, but I cannot recall a Fed meeting where things have been so up in the air, and it is a really close call. There are great reasons for them to do a larger cut. I also can't remember a Fed meeting where markets have been so split going into the decision. Half the market's going to be surprised either way.
I don't think there's a whole lot of difference between 25 and 50 basis points here. We're sort of tracking to maybe 60% odds of a 50 basis point cut. But it's all in the communication as to why they're making that cut. So is it tilted more at we've made a lot of progress on inflation? I think that's a hard story to tell when you've had 3 months in a row of 2.6% or so on their preferred metric of PCE.
Markets are thinking that maybe the Fed is sending a signal here, or at least much more open to starting with 50 rather than 25. And if the view of the committee is that they're substantially above neutral, we can debate neutral, but the highest estimates of neutral are about 100 basis points below where the Fed is. And you have markets pricing in a 71% probability of 50, starting with 25, I think, carries significant risks for the Fed.
And that was Roth Capital Partners chief economist Michael Darda, Silvercrest Asset Management's Robert Teeter, and Laura Rame at FS Investments. Right now, markets are pricing in a cut closer to 50 than 25 basis points.
And Karen, a couple Wall Street titans are weighing in as well. Here's J.P. Morgan Chase CEO Jamie Dimon and Bridgewater Associates founder Ray Dalio.
I mean, they're going to do it, 25, 50 basis points. It's not going to be earth-shattering. It doesn't mean that much. I think they need to do it. So I think Jay Powell does do a great job. But it's a minor thing.
What does the Fed have to do? The Fed has to keep interest rates high enough to satisfy the creditors, that they're going to get a real return without having them so high that the debtors have a problem. So now if we're looking at this, whether it's 25 or 50 basis points, 25 basis points would be the right thing to do if you look at the whole picture as a whole.
And that was Bridgewater Associates founder Ray Dalio and J.P. Morgan Chase CEO Jamie Dimon. For full Fed coverage, stick with Bloomberg for a special edition of Bloomberg Surveillance. The Fed Decides. It's at 1:30 this afternoon, Wall Street time, on Bloomberg Radio and Television.
Now, Nathan, let's get the latest on the presidential race. Both former President Trump and Vice President Harris are back out on the campaign trail after the assassination attempt last weekend. Trump is holding a rally on Long Island in New York today. Ahead of it, he's promising to bring back a tax break that he reined in as president, the state and local tax deduction. We got reaction from Republican Senator Bill Hagerty, who sits on the Senate Banking Committee.
I haven't had an opportunity to discuss this directly with President Trump, but I think this was happening in the context of a huge rally that will be underway there in New York. I know it's going to be very popular in New York. Tax cuts in general in this environment, given the inflation that we've all experienced, are very appealing to the American public.
Senator Hagerty was a guest on Balance of Power on Bloomberg TV and radio, and Trump's 2017 tax law limited the popular deduction in high-tax states to $10,000. The Committee for a Responsible Federal Budget says repealing the SALT cap would cost $1.2 trillion over 10 years.
Well, Karen, Vice President Kamala Harris is proposing a cap of her own on the cost of child care. She says no working family should pay more than 7% of their income on raising a child. Harris made the comment at an event with the National Association of Black Journalists, where she also talked about the attempt on Donald Trump's life.
I checked on him to see if he was okay. Yeah. And I told him what I have said publicly. There is no place for political violence in our country.
Vice President Harris also alluded to Trump's debate comments about Haitian migrants eating pets in Springfield, Ohio, without mentioning Trump directly. She said candidates have a responsibility when they're bestowed with a big microphone.
Well, Nathan, let's turn to the Middle East now. And pagers used by hundreds of members of the militant group Hezbollah exploded nearly simultaneously on Tuesday in Lebanon and Syria, killing at least 9 people, including an 8-year-old girl, and wounding several thousand. Hezbollah and the Lebanese government blamed Israel for what appeared to be a sophisticated remote attack. Israel declined to comment. Bloomberg's Ethan Bronner is in Tel Aviv with more.
It looks almost certain that the Israelis, through Mossad or 8200, one of their major intelligence organizations, got into the distribution or manufacturing chain of these pagers and installed small amounts of explosives in each pager, as well as a trigger inside that worked so that once a message was sent, the message was the trigger that exploded those little devices.
Bloomberg's Israel Bureau Chief Ethan Bronner notes that American officials said that the U.S. was neither involved nor informed in advance of the pagers incident.
In company news, Karen, a legal victory for Google. It's won a court fight with the European Union over a $1.7 billion fine for thwarting competition for online ads. Judges at the EU's General Court backed the Alphabet unit's challenge to a fine doled out in 2019, saying regulators made mistakes in their probe. The decision comes a week after the EU's top court ruled against Google's attempt to avoid a nearly $2.7 billion antitrust penalty for favoring its own product results on search.
Well, an iconic American company has filed for bankruptcy, Nathan, and Bloomberg's John Tucker is here with more. And, John, I'm willing to bet that there's one of their products in just about everyone's kitchen.
Here's a hint, Karen. Put a lid on it. We're talking about Tupperware brands. For decades, they dominated the world of food storage. Tupperware's founder, Earl Tupper, this was back in 1946, introduced the plastic products to the public and patented their flexible, airtight seal. The brand's goods later flooded into American homes, largely by the way of independent sales. Tupperware parties hosted in suburban homes. Tupperware has filed for Chapter 11 bankruptcy protection. They're listing assets of up to $1 billion and liabilities of up to $10 billion. The company's going to seek court approval to facilitate a sale of the business, and they will continue operating during the bankruptcy proceedings. This all follows months of negotiations between Tupperware and its lenders over how to manage hundreds of millions of dollars in loans. In New York, I'm John Tucker, Bloomberg Radio.
And, John, it's an end of an era on Wall Street as well. Steve Cohen stepping away from the trading floor. The billionaire hedge fund founder will remain Point72 Asset Management's co-chief investment officer, but he's no longer investing client capital. The firm says the 68-year-old is instead focused on driving Point72's growth and mentoring and developing talent. Cohen owns the New York Mets. He's been one of the most dominant forces in hedge funds for more than 3 decades, building his firm into one of the world's biggest after a costly insider trading scandal.
Time now for a look at some of the other stories making news in New York and around the world. And for that, we're joined by Bloomberg's Michael Barr. Michael, good morning.
Good morning, Karen. Sean Diddy Combs was denied bail and ordered by a judge in a federal court in Manhattan to remain in prison until his trial on sex trafficking and racketeering charges. A newly unsealed federal indictment alleges he engaged in kidnapping, forced labor, and more. The 54-year-old music mogul, who has pleaded not guilty, was arrested late Monday. Prosecutors allege that Combs used his business empire to force women to engage in sexual acts at events. U.S. Attorney Damian Williams.
As alleged, when Combs didn't get his way, he was violent, and he subjected victims to physical, emotional, and verbal abuse so that they would participate in the freak-offs.
U.S. Attorney Williams says it was there that Combs was violent toward the women, including dragging them by the hair. After the hearing, defense attorney Mark Agnifilio says his client intends to fight the case to the end.
He's been looking forward to this day. He's been looking forward to clearing his name, and he's going to clear his name.
Defense attorney Agnifilio will be back in court today for a hearing to get Combs out on bail. The charges come after Homeland Security raided Combs' homes in Los Angeles and Miami last March. Movie producer Harvey Weinstein, whose alleged sexual misconduct helped spark the Me Too movement, will be arraigned today on new charges. The arraignment in Manhattan will clear up issues that resulted in a New York State appeals court overturning Weinstein's original conviction. The appeals court ruled that the jury heard evidence that should have been inadmissible because it was involved in allegations from other women who never brought charges. All but 2 Republicans in the Senate voted to block a bill that would have ensured nationwide access to in vitro fertilization. Democrats had brought it back to the floor after Republicans previously blocked it from advancing in June. After the vote, Democratic Senator Tammy Duckworth of Illinois said IVF is now threatened by former President Trump, who appointed 3 of the 6 Supreme Court justices who voted to overturn Roe v. Wade.
He is the reason that IVF is in danger. He is to blame. He and every other Republican who cares more about staying good with Trump than about doing good for the Americans they are supposed to be serving.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg, Karen.
All right, Michael Barr, thank you. Time now for the Bloomberg Sports Update with John Stashower. John, good morning.
Good morning, Karen. Mets and Yankees fans both enjoyed last night. Their teams won both by 9 runs, and the teams they wanted to see lose did just that. For the Mets, 10-1 over Washington at Citi Field. The Mets scored 4 times in the 3rd inning, added home runs by Francisco Alvarez and Pete Alonso. Tyler McGill, 6 innings, allowed just 2 hits, no earned runs. Meanwhile, Atlanta blew a 5-1 lead, lost 6-5 at Cincinnati. Arizona lost 8-2 at Colorado. Wild card standings now have San Diego followed by the Mets and Diamondbacks, who are tied. The Braves are now 2 games behind. Yankees won 11-2 at Seattle. Aaron Judge got him going. Before an out was recorded, Judge with a 2-run double. He added a 2-run single an inning later. Austin Wells later with a 3-run double, and Juan Soto with his 40th home run, 200th of his career. Luis Gil got his 14th win. Marcus Stroman just moved to the bullpen, got the save since he worked the last 3 innings. Slumping Baltimore lost to the Giants 10-0. The Yanks are 4 games ahead, their largest lead since June 7th. And Judge knows that if the Yanks win tonight, they're assured of at least a wild card.
Well, we'd definitely be excited, especially after the season we had last year. Missing out on the postseason, that's what we came into this season to do. Get into the postseason and give ourselves an opportunity to go out there and win a World Series. So that'll be step 1, but we got to get there first.
Also last night, the Dodgers lost Shohei Ohtani his 48th home run as he nears the 50-50 club. John Stashower, Bloomberg Sports. Karen and Nathan.
Coast to coast on Bloomberg Radio, nationwide on Sirius XM, and around the world on Bloomberg.com and the Bloomberg Business app. This is Bloomberg Daybreak.
Good morning. I'm Nathan Hager, and we are hours away from one of the most highly anticipated and hotly debated Fed policy decisions in years. Jay Powell and company are widely expected to deliver a cut this afternoon, but just how big it will be remains an open question.
A gradual approach is what they're going to pursue.
25 basis points is going to would be the right thing to do.
If they don't do 50 tomorrow, I'll be shocked.
Now, tomorrow is today for former New York Fed President Bill Dudley, Bridgewater founder Ray Dalio, and Ed Hyman of Evercore, as you just heard there. Joining us now for more on this debate, Veronica Clark, U.S. economist at Citi. Veronica, good morning. I think you've been on both sides of this debate. You were one of the first out of the gate with a 50 basis point call after July jobs. Where do you sit now on Fed Day?
Yeah, good morning. Thank you for having me. I don't think anyone should have too high of a conviction in what will happen today. Of course, we're pricing essentially 50-50 chance of a 25 or a 50. We were initially expecting that this would be a 50 basis point rate cut. And then we saw the CPI data last week, and there were some stronger elements of that. Maybe 25 is now the path of least resistance in terms of an agreement among Fed officials. So expecting a 25 today, but I think it will be a very dovish decision, keeping all options on the table for future meetings. And I do think we are probably in store for some big rate cuts down the line. What makes you think that, Veronica? Yeah, it essentially comes down to what we're seeing in the labor market and the Fed's reaction to that labor market data. We know already that Fed officials see their inflation mandate and employment mandate really in balance now. And the risks are very quickly shifting in favor of that employment mandate. We just see hiring pulling back, of course, the unemployment rate rising, the pace of job growth slowing. We think that will continue in the next two jobs reports that we're going to get before the November decision. And I think we'll see more weakness, and that will let them do 50 at that meeting also. What do you think the market reaction will be if the Fed doesn't go big today? With this debate roiling for so many days now, what's the market talking itself into with this debate? Yeah, I mean, we luckily do have, updated summary of economic projections today. So that's the updated dot plots for, where Fed officials see rates at the end of the year. Of course, we'll have the press conference from Chair Powell, and all of that will matter. If it's not a 50 basis point cut today, it's just 25. I think there are ways that Fed officials can be sufficiently dovish, keep what is priced in already, because you do risk, if you're doing too little, you risk maybe looking complacent, looking out of touch, looking like you're behind the curve. And risk assets, I don't think would love that. We would see yields, further out moving lower on almost a policy mistake kind of pricing. So I do think Chair Powell has to be sufficiently dovish today. I think they can do that. I think they'll show maybe 100 basis points total of cuts for this year in the dot plot. But we'll see what happens. This is Bloomberg Daybreak Today, your morning brief on the stories making news from Wall Street to Washington and beyond.
Look for us on your podcast feed at 6 a.m. Eastern each morning on Apple, Spotify, and anywhere else you get your podcasts.
You can also listen live each morning starting at 5 a.m. Wall Street time on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130.
Plus, listen coast to coast on the Bloomberg Business app, SiriusXM, the iHeartRadio app, and on Bloomberg.com. I'm Nathan Hager.
And I'm Karen Moscow. Join us again tomorrow morning for all the news you need to start your day right here on Bloomberg Daybreak.